Thank you so much for joining us this afternoon. We're really excited to be launching our Community Finance Resilience Fund. For those of you I haven't met, my name's Holly Piper. I'm Investment Director at Fairfall Finance, and I'm joined on the call today by my colleagues Vince Cock and Anya, who will be dealing with some of the questions and kind of sharing some of the content on this webinar. So on the call today, we'll be introducing the fund and its purpose, explaining what funding is available, sharing the eligibility criteria, and talking through the application process. We will leave lots and lots of time for questions at the end. Please do ask questions in the Q&A. Because of how the webinar kind of works, we won't be able to see you if you kind of raise a hand or anything, so you'll need to put your questions in the Q&A. It'd be particularly helpful when you post a question if you could include your name and organisation, just so we know who everyone is. But please don't include any personal information in the questions, because the questions will be published, so everyone will be able to see them. The webinar will also be recorded, so you're not being recorded, it's just the speakers who are being recorded, and we'll send a link through at the end. And all of the information we're going to talk through, all of it is in the application guide. So please don't worry about kind of taking notes or anything. Everything will be available to you very shortly after the call. So with that, I'm going to take it away. Right. So for those of you who are less familiar kind of with Fairfall Finance, we were set up back in 2019 by the government, so with dormant asset funding, to tackle financial exclusion. And I know that several of you on the call are kind of really familiar with us, but those of you who aren't, it's just worth kind of recapping why we were set up. So our mission is to increase the financial resilience and well-being of people in vulnerable circumstances by increasing the availability of fair and accessible financial products and services. I have said that about 1,000 times over kind of the last few months alone. However you say it, it's a bit of a mouthful, but it's really, really important. So we're set up to tackle financial exclusion. So we know there are now over 17 million adults in the UK with low financial resilience. That's 12 million people with less than £100 in savings, a number that's growing since the kind of COVID-19 pandemic and through the cost of living crisis as well. We know that millions of people, including many borrowers and people that you're kind of speaking to on a daily basis, really struggle to access affordable credit. So what we're set up to do is incredibly important and sadly becoming kind of a bit more kind of challenging. We have three strategic priorities. So the first is to expand the provision of affordable credit. The second is to partner with banks and mainstream financial services to increase the provision of kind of financial products overall. And the third is to develop new products and services to address market gaps. So, for example, some of you on the call might have heard of our no interest loan scheme, which is the pilot product we're running with some community finance providers. So that's us in a very, very brief nutshell. And coming to the reason why you've all joined the call today, why we're here. So we were allocated additional dormant asset money in March of this year, so about 9 months ago. And we were allocated additional money in recognition of the cost of living crisis. So we know the cost of living crisis is having a really damaging impact on some of your customers and potential customers, but also challenges for organisations kind of themselves. So we were allocated kind of additional money, £45 million, which actually split evenly between a few different things we're doing. So between the expansion of our no interest loan pilot, between the expansion of our consolidation pilot, and also scaling affordable credit in England. So that's kind of where that money comes from. I think it's always useful to know. And within this, we really wanted to provide grant funding and some investment funding, but some grant funding for community finance lenders to support your organisations and also your borrowers through the cost of living crisis. So really focusing on the resilience of the community finance sector and the provision, then expanding the provision of affordable credit. Now we had a kind of a reasonably good idea about how we wanted to use the fund, but we're extremely keen to hear from the people it would most impact, so all of you. So we launched a consultation kind of over the summer, and New Philanthropy Capital, who some of you will have spoken to, we partnered with them to kind of lead that consultation. I will talk a little bit on kind of, that consultation and kind of what we found and how that really informed the design of our fund. But let me, because what you're all here for is actual, the purpose of the fund and why it's here, just a kind of a really quick reminder that we've got a 5 million pot, the 5 million plus pot. So there is a scope for it to be a little bit bigger. grant and investment funding to community finance organisations based in England. And as I'll mention about 10 times on the call today, there are two main objectives. So the first is to improve the resilience of the community finance sector, and the second is to preserve and scale affordable credit provision to people in vulnerable financial circumstances. So everything we're going to talk about today is about those two goals, that kind of two criteria for the fund. So moving on to the consultation. So firstly, a huge thanks to everyone who took the time to participate. So MPC, with some of our teams, spoke with over 20 individual credit unions and trade bodies, personal lending CDFIs, other stakeholders, including the PRA. There were 3 workshops, 10 individual interviews, and then 149 community finance sector recipients were invited to participate in a survey, and half of them did so. So we're really confident we got a lot of really rich input, and thank you again all for kind of taking the time to do that. And what we found from the survey and the workshop respondents was that increased cost of living is negatively impacting current and potential borrowers. So customers showing increased financial vulnerability, reduced disposable income, increased need for smaller loans, which impacts your profitability, reduced credit worthiness. And that was impacting both the position now of community finance providers, so increased provisioning costs due to increasing arrears, increased operational costs due to declines in acceptance rates, lower average loan sizes, and inflation of core costs, including energy, rent, and staff costs. But it's also having an impact on the future financial and operational resilience. So lower capital adequacy, lower liquidity for credit unions due to savings withdrawals, reduced resources capacity to deliver digital transformation. And that really put at risk the future provision of affordable credit as well. So unfortunately, the consultation confirmed that there was a really clear need for a fund like this. And just in a little bit more detail, in terms of some specifics that came from the consultation, which hopefully you can see informed then the design of the fund. So we found that there was a really strong demand for grant support to cover increased costs and increased provisions. So a third of credit unions said they wanted grants of up to 50k, 16% of CDFIs said the same thing. Half of credit unions wanted grants of between 50 and 250k. Admittedly, another 17% wanted grants of above £250,000, and as we'll come on to, that £250,000 is the maximum size of the grant that we've got, because we want to make sure the fund benefits as many organisations and their customers as possible. There was also a demand for other types of funding as well. So it's not just a grant fund. We're also going to be providing long-term debt, so subordinated debt for credit unions to support their capital asset ratios where they're under pressure through the cost of living crisis. And about 1 in 4 credit unions said that would be really needed. And then we also recognise that there were lots of brilliant different ideas that came out through the consultation. For example, first loss funding to support more lending, piloting something different. And we really wanted to have the opportunity to give those ideas the consideration they deserve. So we've opened up a bucket of funding, which at the moment is called Other. We went through about 150 alternative different names, but that's what we've gone for at the moment. And I'll come on to that and how that works in a bit. But we're really keen, we recognise that it's a really big responsibility to have this funding. We want to make sure it's used as well as possible, and therefore, if you've got, if you're doing something at the moment that supports your organisational resilience and supports your customers, that's the kind of thing we want to be funding. Alongside the types of funding and questions around that, we also had really strong feedback on making eligibility criteria clear. So we've run a couple of funding programs before and heard that feedback loud and clear, as well as a proportional request for information. And we have tried extremely hard to meet that, and we'll come on to that in a little bit as well. So overall, those learnings from the consultation, as well as learnings from our previous resilience fund, our COVID-19 resilience fund, really informed the design of the fund. So don't worry, you are deliberately meant to be seeing this slide again. It's not just a test of memory. So that really brings us to the design of the fund. So as a reminder, it's a £5 million, £5 million plus pot of money to improve the resilience of the community finance sector. And by that, we mean that we want organisations grant funded by us to continue to provide affordable credit over at least the next 2 years. So it's that focus on medium term, not just short term resilience. Improve their profitability over the next 2 years. Retain the majority of staff posts. So we kind of heard from lots of organisations that the need to keep staff in post was kind of really key. And in parallel, hope that the majority of community finance organisations grant funded by us continue to engage with our wider capability work. And there's a lot more detail on our website about that. So that's what we mean about resilience. When we're talking about preserving and scaling affordable credit provision, we're talking about the pound value and the volume, so the value and the volume of loans being made, and also what proportion of your loans are being made by you as a community finance provider to a customer in vulnerable financial circumstances. And we're looking for that to, at a minimum, that proportion to stay the same, but ideally to increase. So when we talk about kind of resilience and kind of scaling affordable credit, that is what we're kind of overall talking about. And we are hoping that the grant funding we'll deploy this year will help to preserve around £40 million of lending targeted at customers in financially vulnerable circumstances. We've also, just because it's important to have our own objectives, we set ourselves the objective to deploy this well and to deploy it quickly. So we're aiming to deploy the majority of funding by the end of Q2 24, so by the end of June, basically. Right, moving on. So I'm going to dive straight in, if that's okay, to kind of what funding is available, and then I'm going to hand over to my colleague Anya. So there is a table here of funding. There is a lot more detail about this in our application guide, which will be available on our website imminently, almost as soon as this webinar ends. So don't worry about writing it all down because it's kind of all there. So the first thing is kind of the grant funding. Now, we've talked about small grants and large grants. They are broadly for the same thing. So a small grant is £10,000 to £50,000. A large grant is £50,000 to £250,000. And that's the maximum size of grant funding that we'll be giving. Now, these grants are for covering increased and unplanned operational costs as a result of the cost of living crisis. So, for example, it might be that you've had to increase your staff costs a lot more over the last year than you had anticipated because of kind of overall wages going up, and otherwise you'd lose kind of some of those staff, or you wouldn't be able to continue to pay the living wage. It might be that your energy bills have spiked kind of far outside what anyone thought they were going to be, and that was a real unexpected cost. It might also be that actually kind of some of your lending costs themselves have gone up as well. So what we're looking to be able to support is those unplanned increases, and it's actually over a 2-year period. So reaching back to the 1st of October 2022 and reaching forwards to the 30th of September 2024. Now, that 2-year time period is chosen partly because it aligns with lots of credit unions' financial years, which we think is more helpful, but also we think it roughly ties to the beginning of the really kind of steep rises of kind of cost of living that came about last autumn, and we think a year, looking forward a year, is a kind of an appropriate time frame. So we're talking about quite a generous time frame here, and quite a lot of flexibility in what that grant can pay for. We're also happy to support specific business infrastructure investments that your organisation might need for your future resilience. So we know from organisations we've spoken to that you haven't always been able to invest over the last few years because of COVID, and then because of cost of living, in, for example, improving your technology stack or redoing your credit scorecard. And we're really keen to hear from kind of specific investment needs that you have there. So the small and the large grants, the reason they're in 2 buckets, as my colleague Anya will kind of go on to, is the small grants will be prioritised for decision making. There's a lower level of information required, so proportionate to the funding the kind that's available. And it's hopefully obvious, but just in case, you can't apply for both. You can only apply for one grant, either small or large. It depends on kind of what your organisational need is. That's kind of the grant funding. The other 2 buckets I'll spend less time on. The first is the capital adequacy investment for credit unions. So that's subordinated debt or deferred shares, depending on what's kind of possible, to support credit unions to maintain compliance with your capital asset ratio, and in some cases also to support liquidity. It's a larger range, so 200k to 500k, and also will require kind of more information. We've done quite a lot of this already through our scale-up program, so kind of really used to working with credit unions in this way. And we know for some credit unions, this is really needed. For others, it's absolutely not, which is fine. And then the final bucket is the other bucket, so the other cost of living kind of resilience funding. And that, as kind of I mentioned, is that opportunity. If there is an idea that you've got that meets the fund's objectives, but doesn't neatly fall into either the kind of the grant pot or the capital adequacy pot, we'd love to hear from you. We're doing this initially as an expression of interest kind of stage, so we just want to hear about the idea, and then we'll come back to it in kind of January to kind of discuss it further with you, and we expect more information will be available. So just before I hand over to my colleague, kind of Anya, just to recap, we've got grant funding is the kind of the thing we expect most people apply for. For those credit unions whom it's necessary, we've also got capital adequacy, so long-term investment, and there's also an other box, which is through expressions of interest. Anya, I am going to hand over to you.
Thank you very much, Holly. So yes, as Holly's already kindly touched on, taking feedback from both the consultation process and our earlier funding programmes like the COVID-19 Resilience Fund, we've tried really hard to streamline the eligibility criteria as far as possible. We've also tested the proposed eligibility criteria with key stakeholders and have got broadly positive feedback so far. I'll talk you through the criteria at a high level now, but there'll be much more detailed information in the application guide that Holly mentioned and that will be available after this webinar. So, as well as needing to be a community finance organisation, so a credit union, personal lending CDFI, or closely associated organisation like a community finance trade body, restrictions on the dormant asset funding allocation mean that the fund's remit is to support borrowers in England. That means that the majority of your current and intended borrowers must be living in England. If you're an organisation that's based in Scotland, Northern Ireland or Wales, but the majority of your current and intended borrowers live in England, we'll be in touch for further information as part of the application process. As the fund is intended to address the effects of the cost of living crisis, as Holly's mentioned, and the fact that we're broadly defining this as having starting around October 2022, we've included a requirement that any community finance organisation must have been lending since October of last year. Further, given Fair for All Finance's mission is to support the resilience and well-being of people in vulnerable financial circumstances, it's really important to us that the funding goes to supporting organisations that are doing this. We look at 4 key borrower groups when identifying vulnerability. So that's borrowers with loans with a value of £1,000 or less, borrowers with loans of a term of 52 weeks or less, borrowers who are parents, who are lone parents with dependent children, and borrowers who are social housing tenants. We'll be asking applicants to provide the pound amount and volume of new loans made to these borrower groups from October of last year to September of this year as part of the application process. We do, however, recognise that not all organisations will be able to provide that information, and so there'll be an opportunity for you to tell us how you support borrowers in vulnerable financial circumstances if you're not able to provide those specific metrics. The next criteria is that eligible applicants abide by the Affordable Credit Code of Good Practice. That's available on our website and will also be in the application guide, and it basically sets out the principles and practices that we believe set apart good affordable credit providers. And it's really important to us that eligible applicants abide by this. It's also really important to note that for grant funding, this is only available to not-for-profit organisations. So you're aware, as part of the feedback, we've removed the £2 million minimum loan book size requirement that was included in the COVID-19 Resilience Fund, but we will be asking you to provide your gross loan book amount as part of the application process. And that's just because it gives us a general steer about the size of your organisation. So I'll now move on to the next slide, which is just to give you a bit more information about the requirements that we'll be looking at as part of the application process. So first and foremost, it's really important that all applicants are able to demonstrate that the funding will support their organisation's resilience and their ability to support borrowers in vulnerable financial circumstances. We're also keen to understand how applicants will ensure their organisation successfully operates after the funding's been provided. We'll therefore be asking you to explain how you'll ensure your sustainability after September 2024. We'll expect all successful applicants to demonstrate good governance, and the sorts of questions we'll be asking around this are the number of false complaints that you've received and that have been upheld since September of last year, since October of last year to September of this year, and also if your audited accounts over the last 2 years disclose any breaches of law and regulation or any issues with fraud. We of course want to make sure that the fund's achieving its objectives, so all successful applicants will be required to report on key social and financial impact metrics on a quarterly basis. Now, the level of detail that we'll require around the funding will differ depending on the type of funding that you're requested, but for grant funding, we expect it to broadly follow the COVID-19 Resilience Fund and subsequent sector reporting. We do, however, recognise that tracking and reporting metrics can be a bit tricky for some organisations. So if you are applying for grant funding, there is the opportunity to ask for an additional £2,000 of grant funding to help kind of support you in that reporting journey. Regarding the next requirement, the fund's subject to the government subsidy control regime, so we need to make sure that everyone complies with those requirements. And finally, for large grants, we'll be asking applicants if they can commit to exploring the use of benefit calculators in their customer proposition if they don't already do so. That's because we at Fair for All Finance think that benefits calculators are a really effective way of supporting borrowers in vulnerable financial circumstances. If you're not able to commit to that, we'll ask you to provide a bit more information about why that's the case as part of the application process. So to come to the application process more generally, I'll give you a high-level overview, but it's been mentioned a few times. But just to reiterate again, we do really recommend that you read the detailed application guide in full before you start your application. It will set out the questions that are included in the application process and also give you a good steer on the sort of information that we'll need you to provide. It will be circulated after the webinar and also available on our webpage. So the application itself will be an online form and it's been designed with efficiency and ease in mind. So after an initial set of eligibility questions, you'll be shown different questions depending on the type and size of funding that you've requested. And that again is kind of trying to speak to the need for proportionality in the sorts of information that we're requesting. Another couple of really important things to note. The first being that you can't partially save and come back to your application. And so again, another reason why that application guide will hopefully be really useful, because you'll be able to get an understanding of the information that you need and gather it all together beforehand in advance of starting your application. You should also keep a record of the answers that you're providing throughout the application process, because Fair for All Finance won't be able to readily provide you with a copy of your application once you've submitted. That's all being well and the submission going through, you'll receive an email that will include a secure link for you to upload supporting documentation to. We won't be able to progress your application without that documentation, so please do make sure to provide it in full. For grant applications, one of the requested documents will be a financial form. This is an Excel spreadsheet template that you'll be able to find on our website. We really recommend that you read the explanatory notes tab and the worked example tabs before filling this out, as again, this is intended to give you a steer on the sorts of information that we're looking for. Once we've reviewed your application, we may ask you to provide further information, but we'll try really hard to keep this to a minimum where possible, particularly for small grant applications. We do anticipate perhaps requiring further information for large grant applications, particularly for business infrastructure. And just for the avoidance of doubt, any applications for kind of capital adequacy investment will go through our usual due diligence process, and we'll of course be in touch to ask for further information regarding any expressions of interest. So the team, will effectively be in touch as needed for those two types of funding. Once we've read through everything and made sure that we have everything and assessed the application, we'll communicate our decision as quickly as we can. In terms of timings more generally, we're very much hoping that the application will be live during next week. We'll post the link to reach the application form on our website, and we'll also send you an email to let you know once it's live. Our current closing date is scheduled for 31st of January 2024, but we may extend this for all or certain types of funding. We'll keep our website up to date with the latest closing date, so you're all aware. In terms of our intended process, as Holly's touched on, we're looking to prioritise small grant applications first, before then turning to larger grant applications. For capital adequacy investments or expressions of interests, we don't anticipate looking at these until the start of January at the earliest, just so you have a general overview of what our intended plan is. We also thought it was important to flag that from the 25th of December to the 5th of January inclusive, members of the team, the Fair for All Finance team, will be on leave. So whilst you can still submit applications during that time, we may be slightly delayed in getting back to you regarding any questions. We're aiming to have the majority of funds deployed by Q3 of next year, and we'll also have the process of an independent evaluation next year or the year after that. I'll now pass on to Vince for the Q&A section. Oh, Vince, you might be on mute.
Hi everybody, bit of a year 2020 error there by me staying on mute. This could be the world's quickest Q&A because we've basically had 2 questions, one of which I can answer verbally. So thank you, John, for posting that. Will the guide include a full list of questions? The short answer is yes, it will. It will list all the questions, and also in there will be some guidance about the key bits of information that would be helpful to know. So a little bit of a guide where there is the opportunity to put in narrative. I think one of the things we had in the consultation was, for example, if we're just submitting, documentation about report and accounts, management accounts, things of that nature, there's often a story behind some of the numbers. So please give us the opportunity to detail some of that where we feel it's important. So I think that's hopefully answered your question, John. But yeah, good question. The other question that came in, which I didn't publish, I did publish, which was, could the granted amount or potentially the investment amount be less than requested? I think the answer again is yes. We will obviously be doing our utmost to meet everybody who's eligible. Sorry, I'm trying to watch. Being a genuine guy, I'm trying to multitask and failing miserably. But if you've applied, sorry, lost my thread there a little bit. I'm just looking at this other question coming. Why is the and I think I'll pass this across to Holly. So why is the 200 to 300 range limited to credit unions?
Sure. Hey everyone, thank you, Vince, and thank you, Anya. And yeah, please do keep the kind of questions coming. We know there are over 90 of you on the call, so we're expecting there to be lots of questions, and we'd love to answer as many questions as possible in this webinar so that kind of everyone can kind of hear the answers. And we will, as well as this recording being available, we'll try and make sure that we're updating our kind of frequently asked questions on kind of our website as well, so that we can we're expecting if there's a question, more than one person will have it, so we're trying to be as helpful as possible. So I'm going to do why. There's a question around why is the 200, it's actually 200 to 500 tranche limited to kind of credit unions. So that's of the kind of the subordinated debt to support capital adequacy. There's a few reasons. Mainly it's around demand. So that's what credit unions, who make up the vast majority of community finance lenders, that's kind of a demand that they had that kind of was unmet. So that's kind of, that's what that product is there for. We are already funding the majority of personal lending kind of CDFIs operating in England. Not all of them, but we are funding a lot of them. If there is a personal lender, not a credit union, who would like kind of additional funding, the EOI is the kind of the route to go through. So that's kind of, hopefully that kind of answers that question there. And please do, if you're asking a question, please do put your organisation name in as well, so we know kind of where you're coming to. Vince, I'm going to be very rude and I'll just elaborate slightly on one of the earlier questions you answered. I hope that's okay. So Sue at Darlington Credit Union had asked about basically, is it a yes/no decision, or could we be offered a lesser amount? And as Vince was saying, we'd hope to be able to kind of, provide the grants that are needed, but I think it is highly likely that for some organisations it will be a lesser amount. And there are 2 main reasons for that. So the first one is we want to make sure we've used this funding as well as we can to meet kind of costs that are genuinely incurred through the kind of as a result of the cost of living crisis. So So this fund is not intended to do kind of business as usual costs that you could have rightly be expected to anticipate. It's those additional costs that are kind of really causing kind of stresses on your business. So that's kind of one kind of key reason we need to kind of see that and see that kind of evidence. And we've designed the application form and the financial form to make that as easy as possible for kind of you to do so. And again, recognising that no one has a perfect crystal ball. So in some cases, in some cases, kind of that might, we're willing to be kind of relatively flexible, but kind of looking ahead, expecting a certain level of kind of assuredness on those costs. The second reason is, frankly, if we are overwhelmed with demand, which we expected that we've got the funds at the size that will meet the demand that we're expecting, but it's possible that we'll have huge numbers of more applications than we're expecting, in which case we'll need to kind of, we're likely to kind of reduce some of those grant amounts a little bit. So Sue, hopefully that answers your question, trying to be as honest and transparent as possible. And I think the thing I would say is we are prioritising decisions on the smaller grants and then decisions on the larger grants. So trying to kind of do it in that order, which hopefully helps. Vince, I'm going to hand back to you.
Okay, thank you. Good question about, can you effectively put in a joint application? I think the answer is yes. What I would encourage you to use is the expression of interest process for that, to tell us a little bit more about that relationship. And I know I've also had a question in advance of the session today about potentially the funding available through the Resilience Fund being able to unlock some matched funding from an alternate source, for example, like a housing authority or a local authority. So I think absolutely anything that's a little bit out of the ordinary like that, certainly use the expression of interest process for that, and it probably enables you to give us a little bit more of a wider description about the proposal. So absolutely, I'm not quite sure who your other partner may or may not be, but I'm sure that'll be fine.
Vince, can I pick up? I know we've got a few questions on the financial terms of the subject.
I was going to say about the terms. I was just looking at those. Yeah.
So what I might do, I'll try and answer all of the questions I can see at the moment on those ones, because I know there's lots of other topics being asked as well. So Emma at Wave Community Bank has asked whether we'll be charging interest on subordinated loans, and the answer is yes. We will be charging a low rate of interest on that on that debt. And for all of the kind of, if you are interested in kind of the subordinated debt and what that can look like, please, say that in your application, and then we're really happy to share kind of proposed heads of terms of what that looks like, kind of to those organisations who are kind of interested in that. As I mentioned in the main part of the presentation, we will be we've provided quite a lot of subordinated debt and also some deferred shares to credit unions already. So we've kind of got a heads of terms that we and they are really comfortable with. So happy for those organisations interested to kind of do that as part of a follow-up. The other question I think around that kind of subordinated debt was about the kind of the quantum, and someone was asking whether it's possible to apply for less than 200k. So at the moment, that is the minimum we're considering. And the reason is, we've got quite a lot of grant funding there that goes more and above that amount, but also it's quite an involved diligence process in terms of that long-term debt. So we think it's more appropriate for the kind of the slightly larger amounts. But I don't think I've got the name for the person who answered that question, but please do kind of be in touch if you want a little bit more detail there. But we're hoping that the criteria and the funding buckets we set out kind of are really clear and what those look like. And we'd encourage people to kind of very strongly encourage people to apply within those buckets, because those are the applications we'll be looking at first. Vince, I'm going to hand back to you.
Thank you. A couple of questions that have come in, one from Ken Agnew, thanks Ken, one from Sean Lynch, thanks Sean. A similar thread, if I'm understanding those questions correctly, about applying for multiple things or a mixture of things. I think to your question, Ken, I think we make one overall application and obviously provide as much narrative as you feel is helpful to explain it. And similarly, Sean, I think if you can cover it all in the expression of interest, we expect that some of those expression of interest applications may subdivide into a mixture of grant funding or other types of funding. So I think both of those, I think you can do as one grant and potentially one EOI request. So that's helpful. One of the things that I'm not sure came out in the slides we went through actually. So just to add this, we will obviously need a certain set of documents to help us make the assessments, but there's also scope for you to add in other documents that you may feel help explain things. So when you get that opportunity, don't be shying, augmenting in some other things that you have which you feel will be helpful, which equates, helps to add up how the grant or the investment is being requested. So feel free to freestyle a little bit in terms of your own documentation over and above the documents that we will provide.
Vince, can I pick up the reporting question?
Yeah, sure. If you've got to that one. Yeah, no, we haven't got there yet.
Yeah, it's fine. I'm cheating everyone basically, and I'm looking through the Q&A to work out the questions I think we need to kind of cover in terms of different topics. So just in terms of the Emma asked, in terms of the reporting requirements, will these be in addition to any current reporting to Fairfield Finance that we already provide? So the short answer is yes, initially they will be additional. However, it will be extremely similar in terms of the reporting, and it depends a little bit on what reporting you currently do. So some of you on the call might participate in our sector snapshot reporting, which is where we ask the kind of high level kind of quarterly data, pull that together and kind of publish it back out so that everyone's got a kind of a view of trends in the community finance sector in as close to real time as we can kind of make it. Our expectation is that will be replaced by this reporting, because I think everyone probably wants to do less reporting rather than more. However, Emma, if you, for example, are participating in one of our very specific product pilots, so for example, our no interest loan scheme, then that reporting is quite specific and different. So this will be kind of additional. So the short answer is yes, additional, but we're trying very hard to streamline it as much as we possibly can. And I think, as Anya and I were kind of saying on the main part of the call, the reason why we're asking for reporting for this fund is both so that we and others have a good understanding of whether it's achieving its purpose in terms of having an impact, but also it's kind of public money, so we need to make sure that we're using it responsibly and being really clear about that as well. Vince, back to you.
I'm just looking through the questions. I think most of the headline ones that probably aren't clearly covered in the guide that we'll publish, we've come to. There's one about. Let's have a quick look. Yeah, I think we're pretty much there on the headlines and the themes of the questions that we published. Naturally, we can pick up any questions afterwards, and we will loop back through these questions, group them up, and publish them very shortly after today. So we'll definitely get back to you on those and make sure everything's clear. So I think I'll draw a line under the Q&A at the moment and just move on to the final section. What happens next? So obviously, thank you for coming today. We'll email everyone who's attended today afterwards. So we've got a list of the attendees, and I can see there's 86 on the call at the moment. So that's fantastic turnout. So thank you very much. We'll make available a recording of the webinar, the detailed application guide, which I think will answer a lot of the questions and provide you with all the questions in advance. There's a financial form which will be available as well, which will allow you to complete and submit details around a lot of the areas around cost change. And then the application link, when it becomes live next week, we'll email out to everybody again on the call. We'll also make it available on the website as well. Any additional questions, obviously we'll publish those and make those available. And for any questions that you think of after the event or come to mind, or maybe you have after you've had a look at the application guide, we've set up a dedicated mailbox for this topic. So, and that detail is there. And I think that is just about the end, but it just leaves me to say thank you. Sorry, Holly.
Yeah, I was going to say, just because you've had a flurry of questions which came in as you moved off the Q&A slide, which I just thought just maybe just kind of cover those just so everyone can hear the answers, if that's okay. Just a flurry came in as you were speaking.
Sure.
If I just kind of pick them up, and hopefully this means we'll get kind of everything. So we've talked a lot about the application guide, and that we can't reiterate enough how strongly we think you should read that first before the application form kind of goes live. So the applications itself won't go live until next week. The application guide will be ready imminently. It will appear in your inbox and on our website as if by magic. So please, please, please read that first. And that can basically help you write your application so you know exactly what you're going to say. And then it's just a question of kind of filling in the details in the online form. So hopefully that helps with a few remaining questions around the application guide. Had a couple of, there's one question from Cheryl at London Plus Credit Union around, does your guide give core examples of the areas of funding you are happy to support within these buckets? So yes, we hope it does. However, Cheryl, we've tried really hard to not be too prescriptive about it. You know your organisation best. So what we're keen to fund is these unexpected additional costs, both core operational costs and kind of transformation costs that you've got over and above your kind of business as usual costs. That's what we're kind of looking to fund. And the application guide, once you've had a chance to read it alongside the kind of the financial form, will hopefully really help you kind of pull those out. And we thought it was more helpful doing it that way than kind of making up a few examples. Once you've read the application guide and looked at the form and you've got some very specific questions, really happy to kind of answer them. But please, please, please have a read of the guide and have a read of the guide first, because we do hope that will help. And then we've got a question from FX around, can any of the funding supplied by Fair for All be matched with other sources of funding or capital? The short answer is yes, it can be. I think, you know, it says grant, if we've made an offer of grant funding kind of available, we would love that to be used by organisations to incentivise other funders, with the extremely important caveat that we're not going to fund costs that are being funded by somebody else. So again, that's for grant funding, that's a really important caveat. What might be more appropriate is kind of thinking about the expression of interest and kind of thinking about that route there as well. So hopefully that answers that question. Vince, I think we have now covered all of them. Sorry for that last minute stuff, but I think we have. So I'm going to hand back to you.
No, thank you for spotting those as I was talking through the other detail. Good to follow up. So thank you everyone for attending. Thank you to everyone again who input through the process earlier in the year. Super helpful, really gracious of you to give up your time to do that. So thank you very much for doing that. We'll send out all the details at some point this afternoon. It won't be immediately we hang up, but we'll get that organised during the afternoon. And obviously, once you've had a chance to look at everything, if you've got any questions, let us know in the Resilience mailbox. We'll keep a keen eye out for anything coming in there. We'll have a sweep round on the FAQs and tidy those up and get those added in onto the site in a day or so, which hopefully will be helpful. But I think, as Holly said, the guide will cover most of the questions that I think have popped up, especially around the process. So that's really good. And you'll all be delighted that you've got about a quarter of an hour back to finish your lunch, go and put the kettle on, and you know, carry on with the rest of your day. So hopefully that was all informative. You got what you needed from it. I'm sure there'll be some other questions that come out. That's absolutely fine. We expect that. So without further ado, I'm happy to close the call and thank you again for attending.